What's up, swing traders? Snacks here. We're going to jump in today and take a look at market breadth. I like to do this early on every month, and we've got a first trading day of September coming for us, and we're just going to take a look under the hood, see if there's anything we can identify, take a look at some strength of sectors and read the room. Okay, there's, again, as always, it seems in these bull runs, there's a lot of bear talk out there, and I'm just not seeing it, not just yet. We're not going to be too predictive, right? We're going to let price action tell us what steps to take. But I would say maybe a bit of caution until we get some more clarity of the next move of the market, if we're going to push back up or if we're going to have a bit deeper of a retracement. So we'll just go ahead and jump in here and take a look. SPY, we'll look at how everything closed last week and what levels I'd like to see hold, and then we'll jump into the ETFs and take a look and find some relative strength. The SPY, we had a bit of a sell-off on Friday, and futures does look possibly like there's going to be a weak open and a bit of volume on that sell-off, right? But we closed above the 9. It's gonna be telling if we do get right back above it and on trend again. It's done so every dip, for months now, guys. So every dip has been getting bought. I, in a nutshell, am bullish, okay? The room that I'm reading says to be bullish. The data that I'm seeing says to be bullish. And mentioning data, I want to give a quick little shout out here of this man that I found on X, and he's giving absolutely fantastic alpha. Let's go to my bookmarks here and these last couple ones that he's posted. So this is what I mean, right? Like, people are shouting again, bubble, money supply, debt ceiling, all these things, all these reasons why we're going to roll over. And not only that, but everyone was shouting for seasonality and August to be a weak month. And if you go back and check the receipts, I was advising the opposite. Not advising, but what I saw under the hood in this video we did last month, early August, was a lot of potential for a continuation, and it's what we got, right? So I'll go back to the chart right here. I've got it circled. This was the first trading day of August, okay? This is August 1st. Look where we finished, guys. And seasonality, all this stuff, right? Don't just hear something and assume that's how it's going to be. You need to learn to read the room, read market breadth, all right? And that's what we did, and we said, if we get back on trend, back over the 9 here, off of this gap down early August, then it's very likely we make new highs and have a strong August, although seasonally or usually some would say it's a weak month, right? The sell in May, go away kind of deal. Well, it doesn't happen every year, and there was a lot pointing towards it being a strong month and a strong summer, which it's been, okay? So right here is some hard data, right? And Ryan Detrick is the man for releasing alpha like this. And it's this kind of thing that just allows me to take a step back. Sure, we might get a pullback here early September. That's fine. We'll adjust or scale back, whatever it may be, right? But if you look historically at what happens after strong months from May, June, July, August, right? Just look at the data, guys. We are very likely 80% to see higher prices in the close of the year, right? Not even so, yes, the close of the year, right? So as we finish Q4, but also the next year, right? So where everybody's saying recession, bubble, blow up, sell everything, like, guys, that would historically be quite the mistake, okay? So we're 80% of the time that we've had this strong summer, we follow with a strong Q4 to close the year out, and I would say 80% is pretty significant. Guys, I'm remaining bullish until I am shown otherwise. Some people are shouting rising wedge here. Yeah, I see it, okay, but let's allow that to play out. It's not broken down. We've got a lot of support below us. Should we get a bit deeper of a retracement than we've seen? But guys, again, every dip has been getting bought. So let's see what happens. Trump is speaking again. He's got another announced meeting at 2 o'clock. I think it may have to do with some India tariff stuff like that. And then also you had the courts deeming them unlawful last week. So I do expect a little bit of volatility this week. I'm not going to be too aggressive. I'm staying bullish until the market, the indices, and the ETFs tell me otherwise. So the SPY again is in trend, right? A small pullback would be just fine. It would be healthy. It would not worry me too much. We're still above a rising 50, and that's a good look here. Tech, Same deal, guys. Above a rising 50, as long as we hold that level, I'm not too worried about the next few days of price action, okay? So we'll see how we act around this level, and if we get what would be a triple R setup, if we get a trending stock, right? I know this is an indice, but if we get a trending stock that retraces, reacts around our level, and remounts to 9, so resumes the trend, then guys, we're off to the races again, you know, at least short term, okay? So RSP still holding the prior all-time high breakout level. Guys, we're looking good here, above a rising 50 as well, and small caps also pushing up towards that all-time high breakout level, okay? And we are still looking to be in a rate cut environment this month, and I don't want to load too heavy into it, but leading up to it, right? A lot of times you'll see us sell the news and a short sell-off after an announcement like that. People, it's priced in, whatever it may be, but you see that sort of short-term reaction a lot of times. So I'll probably take some positions into it should the macro environment remain strong, but I won't be loaded too heavy into the announcement. I don't care what it's going to be, okay? So you just can't predict the reaction. Even if you can predict the announcement, even if you know what they're going to, what the policy update is going to be, you can't predict the reaction. NVIDIA just had a double beat and $60 billion, I believe it was, share buyback program announced, and they're selling off, you know, a few days after the earnings report, right? You just can't predict these things. So what you can do is learn to read market breadth, and that's what we're doing here today. So I like to flip through my ETFs, and we just did the indices, and then I like to jump into the ETFs and see if we can find any strength. So we'll do that now. Healthcare, it's been lagging for a while. We've gotten a little bit of a bounce, right? So maybe a double bottoming pattern here, and above the 200, I would get interested in some healthcare stocks, but we're not there just yet. We're still basing below it. And we've got materials here, so you'll see some lines in here from the last report that I did, but guys, we broke the 200, pulled back, retested it, showed strength, and we're pushing higher. Clearing this range would be a good look for materials. And before I continue, just so I can wrap this when I do finish going through these, when you spot strength in the ETFs, you should click into them and pull up the holdings and then click through these and find strength within it, okay? Find relative strength of the holdings of the ETFs, and a lot of times you will see this is where you find strength under the hood and really nice setups that are breaking out or about to break out, and you can find sympathy plays, laggards, leaders, all of these things, right? But it starts with taking a look at the ETFs, right? And we've got real estate, so again, back over the 200, I'd like to see this get going, right? I think real estate will do well in a rate cut environment, but it's got some work to do to clear these levels for me to really go too heavy in it. I've got Comp and I've also got Rocket are two of the leaps that I have. Comp is my exposure to real estate, and Rocket is, you know, another rate cut friendly stock where, you know, should the mortgage rates drop, they'll do more business is the thesis there, okay? Financials leading, and this is something I'm looking to get into. You can check out my watch list video that I posted yesterday of the stocks I am watching to possibly enter this week, but financials is leading, guys, and we need to be a part of that sector. I think there's more expansion to come from financials, and we've got biotech here, still lagging, but I see some potential now that we're over the 200. Let's see if we can get some legs on this move, all right? And then we can start digging through biotech and find some of the leaders within the sector to possibly position in. And we've got, I skipped past that because it's just not that interesting, but what is this? Staples, consumer staples, right? Just a meh. And we've got energy, so energy is pushing up again. Energy looks like it wants to run here, so it's kind of like some of the other ones we just discussed. Let's see if it breaks out of the range. Well, energy's already done some, right? It's been struggling with the 200, busted it, tested it a little bit, and now it's broken its range, and it seems to be pushing, and it's even gapping up here today on a day where futures is gapping down. So here is strength under the hood. So you want to be looking into the holdings of this ETF and find some setups within these names, okay? So that would look like, just very quickly jumping into the first one, right? Chevron. So I don't see anything here yet for what I trade, but there's some structure here that we could be breaking out of. I don't trade this kind of stuff anymore. If anything, I would let it happen, come back, give a retest hold, and I would maybe buy that strength. But I'd like to see this start clearing ranges and really push up. But regardless, the point is We've identified that energy is pushing here, it's breaking out of range, and if it continues to trend, you want to be looking at the names that make up this ETF and find some strength under the hood. And then we've got utilities here pulling back. Utilities was leading. We're getting a pullback. Let's see if we can get a reaction at or around our level and a rebound at the short term to get this guy back on trend, and then we should have quite a few utility stocks worth looking at. And we've got the consumer discretionary, again, another one that was trending pretty well, respecting levels and pushing up towards all-time highs here. So, you know, I would consider this not leading, but strong, okay? It's been in a trend a while now, and it's quite strong, and it seems like it may want to test highs. Worth looking at. And then we've got communication here, which again, along with financials, I would consider this a leader. And if we break out of this high tight flag, whatever you want to call it, right? If we bust to new all-time highs here, then again, you want to be looking into the communication ETF holdings, find out what's in here, and then find setups within that. If you want to know what kind of setups work well with trending stocks, strong sectors, leaders, all right, it's what I trade. It's my entire model is built off of this. I have 6 different setups that work with the leaders, with the institutional positioning, and put all of this at your back and protect your entries and hit it over 70% at a minimum 2R. And it is the reason I'm up over 170% on the year, on track to do well over 200 and triple the portfolio in 2025. Guys, so working with the leaders in a trend, right? Buying pullbacks in a trend when they show strength, when they show institutional positioning, step in and a likely resumption of the trend. That's what we're looking for, guys, and that's the best you can work with is probabilities, okay? It's not really so much guessing, okay? It's positioning, it's being mechanical, and it's executing when you see a show of strength in a leader off of a pullback. But guys, you find the leaders by doing market breadth, looking under the hood. ARK here is flagging out. Still got some good structure here. I think a push up might get us into new highs here, recent highs for ARK, and that would be very good for speculative or growth names, pre-rev names, stuff like that. Speculative names is what most of this ETF is made up of. And then we've got industrials here looking like it wants to lead as well. So that's interesting. We've got utilities, materials, industrials, all pretty strong, and financials as well. Okay, so maybe suggesting some positioning out of like big tech into these areas. Worth looking at, worth considering and spotting, right? We've got home builders here. Over the 200, I think this thing has a chance to get some legs and get going, right? I do have a half size position based on that theory, right? We've gotten broken over the 200, held it, and if we push again, I think this is gonna get some legs and move. Look at all this good volume coming in here. And then we've got the Grading Shots ETF, which is built up of growth names. So growth stocks, revenue growth stocks is mostly what this is made up of. Still holding structure, still above a rising 50. Guys, we're good, okay? Unless these things start to break down and hold, then we're in a bull market and we're looking for positioning to the long side, okay? We are in a strong bull market. Read the room, guys. Ignore the noise, learn to read market breadth, and we'll finish here with tech. Given a bit of a pullback, but you know, it's just going sideways, it's consolidating. Let's let it show us what it wants to do, okay? So breaking out of this range, either way is going to be very telling for us for tech of what is to come from the big tech names. So guys, that's a little bit of breadth under the hood. Again, thank you so much, man, to not just Ryan Detrick, but people like him, man, like our access to information, right? And X and God, brilliant people just sharing their alpha. It's amazing, and I'm so thankful for stuff like this because I have my own way of reading under the hood and staying in the moment, reading the room, right, looking under the hood. But when you get validated by such great research like this, it's just great. It's great. So Ryan, you're the man for this kind of stuff. I'm so glad I found you. And yeah, guys, that's it. Look, let's chill out on the bear talk right now, okay? Let's just relax. All right, you're missing the bigger picture here. We are in a strong bull market at the moment, and we are going to position accordingly. So guys, be safe out there. I'd say risk environment B minus, maybe even a C until we get a clarity of what's to come, right? Are we going to pull back more or are we going to push higher? So yeah, we're risk profile C, I would say. There is still some strength under the hood. There is some possible strength under the hood. I did like materials, utilities, and what was the other one that looks strong? Communications does look strong. Industrials, right, is the other one that looks like it may want to take a run. So guys, there is some strength out there, but let's see. Okay, let's let it play out. Don't go crazy positioning until we get a bit more clarity. So RSP, again, let's make sure we hold this level. And if not, I think maybe we test the 50, you know, as we've done before, and then we'll see how we react off of that. We're not going to get too predictive, right? Let these things play out and look for where strength comes in, because I wouldn't say we're anywhere near weakness, guys. This is a point that I think matters, right? People get so hung up when we're at all-time highs and calling for bubbles and why everything has to come crashing down. And where are you seeing the weakness in this chart? That, like, you got to explain that to me, right? You can't just say that because the summer is weak, people sell in May and go play or go away. Like, dude, give me a break, right? Read the room, read the charts, and learn to read breadth. And you show me on this chart, since the tariff sell-off, what about this chart tells you to be bearish? Okay? You can have your thesis, you can have, but where are you even getting it from, right? It's like the money supply and all these things of why and this and the bond market and like, dude, stop, okay? Right now, we are in a strong bull market and it's inarguable. I just don't get it. If you're positioning to the short side, you're working against the trend and it's not going well, okay? It's just not, right? You're on the wrong side of the trend here in a bear mindset for the time being. This could all change today, okay? I don't know what Trump's gonna say today at 2 o'clock. This could all change next week. I don't know, but guys, we're in a trend and work with the trend. There's so much more money to be made working with the trend than against it. And I don't see the weakness in the charts that I see out there in the X and I don't turn on CNBC anymore, but I do like to watch Tom Lee. I think he keeps it pretty real. You tell me someone at that level who has been more correct this year. No one, frankly, right? So if there's anyone I watch Fundstrat's YouTube is what I do, okay? I like some of his, I like his analysis, right? I like his way of thinking. It resonates with me. But, you know, sometimes I see clips of him on CNBC through the YouTube, and it's wild to me, man, how bearish some of these people could be. And it's content, okay? Guys, you got to understand it's noise, it's content, it's pay-per-click content, right? So like these articles and all this stuff about why we're gonna crash is just noise, and just make sure that you're protecting yourself position-wise, right? Have a risk profile and don't be overexposed, okay? If you're worried about a sharp pullback, then keep your exposure low, okay? But I don't understand front-running the possibility of a crash. Like, you don't know that's gonna happen. And there's nothing about the past that is telling you surely that's going to happen, i.e. August. Everyone said seasonality August, it's going to be weak, and it was a very strong month. I believe 4%, near 4% up on August, in August, guys. Like, a lot of people were screaming seasonality and we were gonna roll over and we were gonna go into a recession and sell everything for 2 years. And like, guys, come on, give me a break. Read the room, all right? That is your best chance at a crystal ball, and all you can do is react, okay? Don't be so predictive, and just take a look at what we see here, and I see strength, and you should too, frankly. You should see strength. Take out this little tariff thing and, like, dude, we're on a freaking ripper, guys. We're on a ripper. And how long can it go? Okay, well, zoom out to all time. And that's how long. Forever. Okay, as long as companies and nations are expanding, as long as companies and GDPs are expanding, stocks can continue to rise. Guys, it's how it works. In my opinion, my humble opinion. But guys, thanks for hanging out. That is our market breadth for September. And yeah, keep an eye out for the daily watch list as we kind of dive into the actual stocks we're looking to play. But I trade the leaders in a trend backed by growing fundamentals, and I wait for them to go on sale, see institutions step in, I do alongside them, and it gets back on trend. Guys, I encourage you to trade with the trend and with market structure and ignore the noise. All right, I'll see you next time.